Hey, welcome to the closing beat, everybody. Happy Friday. Hope you had a good week here so far, and you're joining us on a Friday. Good for you. We're financial advisors here at Jazz Wealth. Hope you keep us in mind. Just go to jazzwealth.com. We do this every day for our customers, but also for you guys that like to participate along the way. And for both of you, whether you're a customer or not, we're playing a game. It's called Guess the Dow. You can go to that website on the bottom right-hand corner of your screen there, and you can actually guess where you think the Dow is going to close next week. You have until tomorrow around lunchtime to place your guess for next week. We don't ask for anything from you. Just, who are you? Where are you at? And we'll take your guess there. Our winner this week is a customer of ours by chance, Maria Chavez. She had a guess of 2676.5. She was 5 points off, basically, from where the Dow closed. So congratulations. You got to be the closest without going over. Maria Chavez was the closest without going over this week. 2676.5 was the guess. We will be crediting your account $100 because they're a customer. If you're one of our customers, you can guess, and you can say, I'll take the gift card, or I will rather have my account credited. Even if your Roth IRA or IRAs or whatever we manage here for you is at the max, right? The fact that we credit it doesn't hurt your contribution limits there. Also, we had an awesome class last night talking about the recessions, talking about the stats around recessions, before, during, and after. We broke it all down in really 2 simple slides there. So if you're one of our customers, go in the dojo. It's the most recent class that you'll see in there. And we'll be back next week, of course, to do it again. We do weekly classes for our customers. Just try to teach them something new, just to focus on different things along the way. Anything that we can help out to teach, as well as update on the portfolios. Let's talk about the stock market today, because you got the markets lower. The Dow lost 254. Ooh, that sounds scary. The S&P lost 11. Well, that doesn't sound so bad. And the NASDAQ lost 67. That sounds pretty bad, actually. So disconnect again. Yesterday we talked about the disconnect between the Dow and the S&P, gave you a little education on that, and it was because of IBM. Today's disconnect in the Dow, meaning the Dow lost more than the S&P, was because of Boeing and Johnson & Johnson. Some tough ones there. We'll go through that there. But bottom line is, if you look at the S&P, or you're an S&P-driven type investor, or your portfolio is built around that or something, actually it was just kind of like a normal down day. Really not that much to be worried about. You take a look at the charts here. You got the S&P 500 hovering between the known support and resistance area that we're focused on there. Not much, right? We talked about there needing to be a catalyst, positive earnings, continuing hopefully to push us over the highs there without a lot of drama from Washington or trade-related stuff. So for now, the S&P just had a little bit of a down day, not too big of a deal. But if you look at the Dow, that's a little bit worse, all right? So you got that disconnect again. Again, it was because of Boeing and Johnson & Johnson, responsible for shaving more than 120 points off the Dow. Those 2 stocks added up over 140, actually. It would have to be over 140. Anyway, so rough day, which is sad because it took the attention away from Coca-Cola. They're in the Dow there, and they had a good day today. We'll cover that here in just a moment. Earnings season off to a good start so far. If you're paying attention, you've got 81% of the companies beating on earnings. Historically, we're at 61.2% right now. It's still early in the earnings season. We've only had like 75 or 80 of the S&P 500 companies report. So still very early, but so far so good. You also got the Fed out there. We've been talking about that every day. The Fed out in droves, man. They're just all over the place. Well, today they actually changed their their wording a little bit. So the Fed's now moving towards hey, we're taking this on a meeting by minute case here. And a lot of people sort of looked at that and said, oh, okay, so they're going to continue to cut rates in October, but maybe we won't get rate cuts in December. Anyways, there's now an 83% chance of the Fed cutting rates in October, at least 25 basis points, and that was 67 last week. If you remember, we talked about that last Friday or Thursday. It was 67%, so a lot of traders basically just baking in another rate cut there. The Fed wants you to spend your money, right? You notice how everybody got excited about these savings accounts that paid 2 or 3% or whatever, and then the Fed came in and cut the rates, and you're all like, oh man. I get tons of calls and emails from customers just saying, well, now what do I do? Where do I put my money now? I don't want to save it at like 1.9% or whatever it is. I mean, I can save my emergency fund, that's fine, but what do I do with the rest of my money? The Fed wants you to ask that question so that you put your money in a stock market, you put your money into real estate, you put your money into Christmas shopping, and you go buy stuff from the retailers. That's basically what they're shooting for there. Anyways, you got the NASDAQ still higher by 21.9% on the year. S&P still higher by 19.1%. The Dow is higher by 14.8%. And the Russell lagging still in last place is still up 13.9%. year to date. Let's take a look at a few of the sectors here as we'll dive into it. The semiconductors is carryover from yesterday. We broke this down, talking about the weakness in the semiconductors, how that works, how to be expecting it coming forward here. Today we have more weakness. So between yesterday's class and today's class, a good lesson on how to sort of do a top-down analysis from the overall markets down to the individual sector, down to individual stocks, and see, oh, okay, if the semiconductors pulled back, it wouldn't be such a big deal there. Taiwan Semiconductors, the biggest position inside of the semiconductor area there, was down another 1%. Same comments, right? This is a great lesson here, secondary to what we talked about yesterday. Stocks being too extended in the short term tend to pull back, and that's exactly what we're getting here. So I've walked you through that day by day, from before it happened to as it happens, and now we'll follow it here as we go. If anybody cares, I don't know if you're, I know you guys all have your focuses, but we could walk through that as well. CLAC was one of the ones we pointed out yesterday, hit new highs, reverse, same thing. You see a little pullback there. I would keep the same comments. If you see these semiconductors starting to pull back, it's just the sort of results of the underlying stocks in this category here being a little extended. Healthcare was your biggest mover week over week. If you happen to care, from lows to highs, it was the biggest mover and pretty much ended up flat on the day. The smallest mover week over week, meaning for this week, was the energy sector, the XLE. You can see it just barely fell just a little bit there, but all in all didn't accomplish much of anything this week. Communication services, you'll find that lower today, 1.16%, most of it due to the drop in Facebook. There you go. Facebook is the, there we go. Biggest position inside of communication services, and Facebook was down 2.33%. Alphabet is the other big position in there, and that lost a little bit as well. So communication services down a little bit. Enough of the negative. Let's go to the positive. You had home builders higher by 1/3% today, hitting new highs again. That would be the fourth time this week. And we talked about this yesterday, maybe just a day or two of excitement left, and then you'd expect to see that pull back as well in the short term. So not bad there. Regional banks higher, 1.18%. A lot of the regional banks reported earnings this week, and so across the board, the regional banks did well today. 0.6% on PNC. BB&T did well, about 0.5% there as well. State Street, they reported their earnings. Great day for them, back above the 200-day moving average for the first time as far as you can see on the charts there, right? So that grabbed some attention. Also, you could tell by the higher volume there, that grabbed a little bit of attention there. And SunTrust was a little higher on the day. So just across the board, if you go through the KRE, the regional bank positions, I use the KRE to show you that. Just kind of a broad rally there. Consumer staples were a little bit higher today. I'll use the XLP to follow that along, about 0.2%, and that's largely because of Coke. Coke reported their earnings today. Earnings were basically flat. Revenue came in better than expected. Organic sales are always a focus for Coke and Pepsi and some of these big guys. Organic sales were up 5%. It was good, whatever it was. It was up, I think it was up 5%. They raised their guidance, which they don't always do. And we talked about Coca-Cola, the last 11 quarters having moves outside of its average. The average move is a small gap down of 0.07%. Last 11 quarters, it did more than that, and same thing this quarter, so above average there in terms of the move for Coca-Cola. Anyways. Stocks, you got American Express down 2% on the day. They beat on earnings, beat on revenue. This was the one we said before, yesterday. You have a 50-50 shot of them being positive by a little bit. The average gain on earnings day is 0.26%, but you only have a 50-50 shot whether they beat earnings, miss earnings, guide higher, lower, whatever it is. It's a 50-50 shot, so we pointed that out yesterday. Bring your attention to that. You probably noticed Boeing falling today, about 7% to the downside, closing around 344 on the day. There was some text that came out that one of the chief pilots there was testing the MCAS system in the 737 MAX, and he... So in the text messages, he talked about how it was going crazy, and it was a simulator. The simulator that he was testing it on was going crazy. It was just hard to work with and everything. And then he said, I basically, what was his quote? He said, I basically lied to the regulators, right? We don't know if that means, like, and then he put in quotes or parentheses, unknowingly. So we don't know if that means like he was like being sarcastic or whatever. So that hurt the stock initially as people got wind of that one today. I thought the funniest, but this is not funny at all, but I thought the most interesting part of the text messages, if you read through all of them, he puts in there, granted, I suck at flying. So it's a pilot. I don't know if it's a Southwest Airlines pilot, but he puts in his text message, granted, I suck at flying. Do you want your pilot with that kind of mentality there? I just thought that gave me a little chuckle there. I know it's a serious matter, but still, So anyways, the price of Boeing lower on the day and dragged down the Dow as well. E-Trade reported earnings there. They beat on earnings, beat on revenue, got about a 4.5% gain today. Back to the 50-day moving average if you happen to be following along on a chart. They basically did well. Everything was really good there. And they said, we are actively going to be seeking more customers that don't pay us anything. That's become the business model of the world lately, is to attract customers, let them have everything, and we'll figure the rest out later, how they make money. So you know where I stand on these commission-free positions that everybody's making there. You know, it's a good thing, but as long as the technology doesn't suffer. Johnson & Johnson was the other Dow stock, lower 6.25% today. This one's sort of unfortunate. They found trace samples of asbestos in samples. They did test samples of their baby powder. So Johnson & Johnson's got to recall 33,000 bottles of baby powder. When they talk about trace samples, you want to check this out. They found that the baby powder consisted of 0.00002% of asbestos. But that's still enough, I guess. So it was a big deal there. The stock lower, back almost down to lows if you're following along there, down to almost to that 127 area there. You got Kansas City Southern reporting earnings. This is a railroad stock that hit new highs today. It was a big move for Kansas City Southern. Remember, CSX and Union Pacific, they reported weakness earlier in the week. However, they said, look, we're saving money. We're cost cutting. There's a new efficient rail system that was put into place just a couple years ago. And so they said, we're saving money. All in all, it's working well, even though our volume's a little bit lower. Kansas City came out and they basically said, yeah, basically everything's good. You break it down, you look at how Kansas City does their routes. They're mostly down to Mexico, so their Mexican trade was the biggest driver of their earnings beat. Oil and gas shipments and routes to Mexico were up 21%, so it was a big savior for them. Other than that, energy was down a little bit. Actually, energy was down about 11%, but overall, Kansas City Southern, like they did last quarter, reported the opposite of what the other rail companies had reported. So we covered that last time as well, but you get the picture there. Kansas City Southern looking good if you're participating. 62.3% of the S&P is above the 50-day moving average. That's another way to kind of see, all right, today was just a little down day. The Dow makes it look like there was a huge down day, but the S&P are like, all right, we were at 65% of the S&P above the 50-day. Now we're at 62.3. Small change there, not a big deal. That's because it was just kind of a normal day for the S&P. Yeah, 27 new 52-week highs on the day. It was a good mix, really a good mix of some cyclical stocks, defensive stocks in there. All in all, not too bad. We'll cover a few of these here if you care. You got Nike. We happen to own Nike, TJ Maxx, just checking through some of the stocks in our portfolios. All hit 52-week highs. I have the same comments on TJ Maxx. You can even see it today. It had a great week, had a great couple weeks actually. But now it finds itself a little extended. And so the fact that it tried to break to new highs today and pulled back, that's your first hint that maybe this thing's ready to take a bit of a break in the short term. Not like it's a reason to run for the hills, but just, you know, you get it. Same with McKesson. Hit new 52-week highs there. Very extended. You don't expect this to blast off and replicate everything that it just did. Same exact comments as yesterday, but still good there. We happen to own all of those. And a lot of REITs here. Realty Income got a little boost. The sector did well today, but it got a little bit of a boost from Bill Gross, the guy from PIMCO. He happened to mention that he liked the stock, so that helped it close up near the highs. Excuse me. It was a good mix of different types of REITs, by the way. Avalon Bay, you got in residential real estate there. They did well, new 52-week highs. HCP's in the healthcare space. If you're like, you know, REITs aren't all just like apartment homes and homes. Like, they can be apartment buildings, single-family units. They could be healthcare spaces like nursing homes and things like that. It could be technology-based, storage-based there. It could be public storage, like the sheds that you see when you drive down the road and you pay like $50 to store your stuff there for some reason. So there's all across that sector there. If you break it down into the tiny, tiny little subsectors, it's just a good day for them. Did really well. But see, you also had names like Home Depot make new highs today, Target, some retailers poking to new highs, a little extended in the short term there. Dollar General did well. Dollar Tree also did well, new 52-week highs. So looking good there. I mean, just all in all, the stocks that hit new 52-week highs, nothing like blasted off to scare you. Kansas City Southern did pretty good, but other than that, that's it. Two new lows on the day. That would be energy and oil related. Devon down to new lows there. It's been kind of flirting with doing that for a while. And then EOG hit new lows as well. with higher volume there. So really starting to peel away there to the downside. Do you like your stats plays? If you like stats plays, I got a couple. We'll follow along here. You got level 3, or L3. I always say level 3, sorry. L3, it finds itself a little extended to the downside. If you study every time that it's been as extended as it is currently, you find that over the next 5 days, the average gain is 2.58%, and you have a 75% chance of that happening. Did you get all that? So 75% of the time when the stock has sold off as much as it has currently, over the next 5 days, the average bounce is 2.58%. So if we were to just have some fun and draw a little line here, we'll go up 2.5%. It's actually 2.58. See how close we can get right on it. 203.52 would be the magic number. So we'll draw a little line there. We'll give it 5 days and see if that pans out. It's a little crooked, but you'll forgive me. That's LHX. I usually just say level 3, so sorry if I say that going forward. CVS is another one to the downside if you like some weakness in the market. CVS, the corner store, you know these guys. So 62.1% of the time after being as extended as it currently is, it is lower by 1.34% going forward over the next 5 days. So I'm going to zoom in a little bit, dial right in on this thing. We're looking for a drop. I'm not looking for it. I'm not telling you. You get where I'm going with this. 1.34%. That'll put you at 65.30. So we'll just draw a little line here at 65.30. We'll see what happens. These are just fun. I don't know. I just like following along. I'm a stats guy. You get it. And yeah, so that's what I have there. A couple other things here. Slack. Slack it didn't hit new lows today. Almost hit new lows, but if you look at the price of Slack, that's going to be down about 18, almost 19% on the week. Do you like a discount? Since the IPO, it's done nothing but basically trend lower. So that's that one. Facebook was lower today. Jamie Dimon was at a Bloomberg conference, and he said in his quotes that the Facebook Libra crypto that they're working on is a neat idea, but will never happen. And so that kind of hurt them a little bit there today, in addition to what Mark Zuckerberg was talking about yesterday in his speech. And lastly, Netflix retracing, giving back all of the gains from yesterday, giving back all of the gains, in fact, over the last 6 days. So big down day for Netflix, 6% on that one. A lot of people deciding to take some money and run away there. Monday, we've got earnings from Halliburton in the morning, and then in the afternoon, really TD Ameritrade, Logitech, and Zion Bank. It's a regional bank. That's pretty much it there. You got dividends coming out for Ford, Zoetis, I don't know if that's how you say it, and Apache, 25 cents. Yeah, that's basically all I have. I'll take your questions if you happen to have any. Otherwise, yeah, we'll move on and have a great weekend there. There you go. Let's see. Beyond Meats, you're like, why is that down so much? Value, right? It's just not worth what it came out as. Now, it is making its way back to a gap fill. People like to look at that. Technical traders always assume that any gap will eventually fill itself. It's kind of a silly thing to talk about, really. But if you look at a gap on a chart, when this stock moves higher, there are technical traders that believe it will at some point come back and fill that gap, meaning trade below to sort of fill in the price chart there. We're almost back to that, so that'll act as support in the meantime. Lucky for anybody that happens to own it, that happens to be around $100. That also acts as a psychological support area as well. So it seems to be bleeding down to that area. The sell-off, you notice, getting more and more aggressive to the downside on heavier volume. That lets you know more and more people are giving up, exhausting themselves on being owners of this stock. If you're a short-term trader, that's good news for you. Yep. Yeah, that was weird for him to talk about that. Oh, I wasn't really going to show you the news set there, but if you've never seen us here, that's basically what we look like. If you want to see what's back there, that's the first set. That's where I usually stand. This is where we do the the 1 o'clock videos there. And then, that's a drum set. And then over here is the speakeasy we're building there. It's not really lit up or anything yet. Hopefully we're going to work on that. But I'm going to start doing videos just from random places around here so you guys can see. I know a lot of times it gets stale just seeing the same thing. But we got the lights up there. You can see over here, big studio lights. It's over this way. But all a work in progress. Instead of building an office with like putt-putt courses and stuff, we're like, let's build TV sets and then let's just start teaching people. We'll just keep going. So our classes actually for our customers are going to be the Thursday classes. You'll be able to see the whole bar and everything through there. So we'll see what's going on. I hope to have that done. I mean, I'm hoping to have that done here next week. UNH, what was the question on UNH? Is it overbought? In the short term, you'd expect, yeah, it's a little overbought. You like that it's back above the 200-day. Ideally, you just want to see it go sideways. If it pulls back, that's okay. You would then be able to confirm, all right, it's overbought, whatever. But if it goes sideways, what happens is everybody like you that's saying, is it overbought? Should I wait before I buy it? If the stock goes sideways, then it makes you go, maybe I'm going to miss something. Maybe I should just buy. And then the stock ends up better. So ideally, psychologically, you want it to move sideways. Yep. Cool. Sorry if I missed any of your questions there. I got off a little topic there. Any thoughts on why AYX is falling? So from way back, the was it September earnings there? September 9th or something like that. That really kicked things off. And anytime you sell off like that, you never want to be the first to buy the stock, right here. So anytime you see a move like that, it is well above average to the upside or downside. You don't want to be the first to jump in after that. It's just like I always say, it's like falling out of a 10-story building, right? You can fall out of a 2- or 3-story building. See here, these little drops? You can fall off your porch or off a curb and you can get up and be just fine. You can't fall out of a 10-story building and immediately get up and walk away. If you take that mindset and apply it to a stock and you see this sort of thing, that'll help you avoid if you're ever getting stuck in things like that. Yep. Yeah, you got to work. So the question is, man, I keep seeing all these things about the world coming to an end, financial collapse and everything. You got to be careful with that, especially if you search it on YouTube. Because remember, YouTube wants to show you what they think you like. So you notice how if you watch a video of me, all of a sudden there I am everywhere because they think you like this sort of thing. You'll see other traders and stuff and other advisors maybe. But if you're looking up like financial catastrophe, they're going to keep showing you that stuff because remember, they want to share the ads. They want to make the money off of you. And if you're willing to watch a video about financial collapse, they're just going to keep showing you those, which makes you think, oh my God, the world is coming to an end. But no, it's just because you keep watching it more and more. That's like if I just kept saying the Cowboys are the best team in the NFL, they're going to get better and better and better. At first you laugh at me, but if we said it every day, eventually I'd get some of you. Yep. I don't know anything about the ticker symbol cash. Some of these oddball, I mean, not oddball, but some of these like less, lower volume stocks, I should say, don't usually look into those. It looks good from a technical point of view. Nice tight uptrend there. All looks good. Oh, thanks, Chris. Wondering what you thought about adding to Bristol Myers. So you got BMY. Maybe you were trying to pick the bottom there. You just trying to get a good idea of where to go. It's fine with me. I would want to buy it at a discount there. Even though you got a little uptrend happening, you wouldn't expect a large drop, but any drop is always better to me. I like buying when I get a discount. Today, you're basically at its recent highs there. It's tough to want to pay up for it. I'd let it have a down day or two. Wait for the markets to fall a little bit, even if it's just a couple days. Then you feel better if you bought it like 52 or 51.50 or something. Just gets you kind of, like anything in life. If you can buy it cheaper, awesome, Yeah. I can't tell you like where to buy TJ Maxx, but I could say as extended as it is, that same thing. You want it to take a break. Just let it take a break. There's no hurry. This goes on a watch list. If you like it and you say, okay, I'm bullish on TJ Maxx. I want to buy it, but I'm going to just check it once a day. Where are we at? Pulling back, pulling back, pulling back, pulling back, and watch it that way. I wouldn't try to pick like the best possible spot now. Yeah, cool. I'm guessing maybe you own that there, the Gulfport Energy. These are tough. I mean, it's getting really tough for some of these that are falling in the low single digits. I haven't studied this one enough to know. It's just one of those, you see weakness, and it's not temporary weakness. This is a real beaten down weakness sort of thing. So unless you're thinking some kind of merger or buyout or something, I think you're better off looking elsewhere. Who do you think won the Democratic debate? It shows how much I know. I didn't even know there was one. To be honest with you, was there one last night? Or today or something? I honestly don't know. I haven't followed it. Couldn't tell you. Until they start saying stuff about our dough. I'm not into the bickering. I don't care what side you're on. Let's see, what are you going to do about our dough? How are you going to help us all make a little more money? Cool. Do you think PayPal's trading at a discount? Yeah, you can make that argument. Sure. Especially in the short term here. I mean, where it was, I know people ask about this one all the time. But you're basically looking at, come on, this thing won't work. You're basically looking at 16+% to the downside. If you have the ability, go back and look and see how often does it fall 10% and give you a bounce, and if so, how much? How often does it fall 15%, and when it does, what's the average bounce from there? It's not going to be a lot to go on, but at least you get a better thing there. But yeah, 16%, 17%, I think it's a discount. Yeah, he's asking if Tesla's undervalued ahead of the earnings there. Tesla is another one I don't like to be around during earnings. That's tough, right? Because unless you're really on top of your game here with what Tesla is doing, that one could be, you could wake up and see it down 25 points, even more, really. So I don't focus on that one around there. We'll go over the stats if you like, leading up to it. Yeah, Eminem's got the right idea. You could see like good news, but everybody is that like things are great with Tesla and the thing will still fall $30. I don't pretend to know enough about that one. I think in general, like the question is on what do you think about like Snapchat, Facebook, and things. They're two different animals there, right? I think in general, Facebook at a discount would be acceptable. It's fine. I know there's a lot of political risk there right now. That'll pass. And you hope that some of this just translates into more downside, really. But I don't have a problem with it. Yep. Do you think Tanger's finally found a bottom there? I mean, in the short term, yeah, you got a higher low, right? So people will look at this. If you're a technical trader, I'm just pointing it out just as I see it. But you have a higher low here, always good. So think about what happened. The stock was trending lower, 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 lower. And then there's this period where people felt like they were going to miss the bottom. People looked at that and said, holy cow, I better buy the stock or I'm going to miss the bottom. Well, we did a video on this in the past, how to buy stocks at the bottom here, a couple different ways to go about it. And one of my favorite ways is to let a stock bottom out first, see the emotion, the greed of people fearing they're going to miss the bottom, let it relax, and as long as it doesn't make a new low, that next bounce, go ahead and play along then, right? Who cares if you have to buy it a couple, after seeing the bounce? Like if you had to buy it in here, who cares? You got to watch it bounce first, you got to watch the weakness not as bad as it was in the past, and you got to see people come back and say, okay, cool, I got a little short-term discount, they bought it. That gives you a little more confidence. Also, if the stock falls now, you're risking, what, $13.75-ish? So you've got about, let's just call it $3 range there. If it falls $3, you go, okay, I was wrong. I'm going to get out. Whereas if you buy it in this area, you have no idea where the bottom's going to be. You couldn't have guessed that this was going to be the bottom. So now you can define your risk. You could choose your entry point. That's up to you. But you can now define your risk. And so when you can define your risk, you can define how much you want to lose if you're wrong. Anytime you can define how much you want to lose when you're wrong is a good thing. It's a good thing. Yep. I love it. Well, I'll wrap it up there. Monday, slow start to earnings, like we talked about there. We'll be back Monday, of course, to do this all over again. No show on Tuesday. We're going to have the day off on Tuesday from doing the show here. We're putting together some cool stuff for our customers, so I got to put some time into that. I appreciate all of you guys watching, and enjoy your weekend. See you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes before ours.